All right, hey traders, TG Watkins here. So those of you in the Moxie room, I'm back for the second time, and for those of you out on YouTube, Facebook, and X, we're tuning in, and while this market pulls back, this is something we've been looking for, kind of waiting for. And yet yesterday had a bit of a surprise move to the upside, so we'll talk about that. And then I'll show you guys some breadth indicators that I think are also telling us that they're might be a little bit more downside here, not just today, but kind of going into the future. And part of it, I'm wondering if this maybe is the beginning of the market starting to kind of take some chips off the table for perhaps the election. We could also point to some technical indicators that help show us that, but we'll kind of go and walk through a lot of what we see. So yesterday, well, okay, let's see. So Monday, the market moved down, got below the 15-minute 50. And so my standpoint was the market is going to be in consolidation mode, pullback mode, something like that. You know, we're likely to come down. And yesterday to the Moxie class, I was saying, hey, we should be mostly expecting the SPX come down to the daily 21, something to that extent. But then what we got yesterday was kind of a big move to the upside in the later half of the day. And it sure seemed like a short squeeze to me because basically that move occurred when price broke the 15-minute 50. So I think a lot of people out there, traders or whatever, were looking around at this and, you know, maybe the 15-minute 50 was their line in the sand, which it is for me. And you can see basically as soon as it crossed it, that's when they got the pop. But if we zoom out and we look at this, and I told the Moxie traders this. I said, hey, I'm not super sure about this because the Moxie indicators are still below zero. It's not really giving us a good signal. I said, if by chance the market does actually want to continue up and it stays above the 15-minute 50 and it stays above the hourly 50, then fine. Okay, then we can keep pushing this can along, keep kicking the can along the road, and the market can go up a little bit or chop or something. But if we cannot stay above the 15-minute 50 and if we cannot stay above the hourly 50, then we're most likely going to go down from there. And that's what we got this morning. Now, down low, looking at the lower time frames, it kind of looked, I think right off the bat, I think a lot of people are thinking, oh, okay, you know, buy the dip, or we open with a gap down and we move up. And we didn't get that at all. Basically, the market came down, went sideways, came down even further, which now this all seems pretty normal to me. I was like, okay, you know, push it down a little bit further because, you know, we're going to keep going down like that. And then we got a bounce. Now, really what I wanted to see from here, and this is what I was live on the mic with Moxie and the Moxie traders were, is I was trying to see is does the market actually want to go up a little bit more before rolling over? You know, like was this push down just a little too much, get a little bit stretched, and does it want to move up from there? And basically, we were kind of watching through here, and I jumped off the mic to get ready for this session, and then that's when the move occurred. But what I was looking at was like right here. I was like, is this going to hold? And we never got any kind of signal showing that it was going to hold, despite being oversold or anything else like that. Because you can see, just look at that. We never even got the 8 to cross over the 21. We got it back here, but price got rejected by the 2-minute 50 and the 5-minute 21. And so you can see this. And so for those of you in the Moxie room, I was talking about this. I said, hey, remember, a double bottom only works when it works. Otherwise, it's a resting area until price moves lower. And I said, you know, that's what we need to be careful about, is this could be a resting area until price moves lower. And that's exactly what we're seeing here right now as price continues to drop from that level. So since the double bottom didn't hold, you know, door opens up and down it goes. Now, I believe some people have 5,800 as a target for today. I think John Carter's kind of looking at that. We'll have to see. It might get there eventually, but this has been a pretty strong move down so far this morning. You can see we were definitely outside of the 30 ATR on the 5-minute, so it bounced. We are now getting to that 30 ATR again on the 5-minute. It might bounce, it might consolidate, something to that extent. So if we're going to go lower, it might take a little bit of time, because you can also see, look at the 15. Went to the third ATR, kind of flagged. It didn't really bounce, but it kind of flagged. And then you can see here back down to the outside of the third ATR. So, you know, kind of seems real heavy for today in this moment. But oh, here we go. Even on the hourly chart, we are hitting the hourly 30 ATR. So we might be coming into some areas where, I don't know if the downside is over for the day, but it definitely seems like, we've kind of had a push so far. And then if we kind of look at this, yeah, we'll have to see 5,800 if it's an area. I'm looking at my spot gamma stuff, and there's a level, yeah, right around 5,800. So there's kind of that node in there as well. And so we'll have to see if that can get down there today or not. And so the next thing I'm looking at, after 5,800 is let's look at the daily 21. That area doesn't have to be perfect or exact, but just something around there. So we could continue to go lower into the future. But yeah, generally speaking, when we could not get past here, and then we broke the 15-minute 50 right there, that started this whole move to the downside. And we just got that fake out move yesterday with the SPX. A lot of other people have been looking at NVIDIA. So goes NVIDIA, so goes the market. And even yesterday, I was like, yeah, I kind of, this has had a really good move, but I'm kind of looking at NVIDIA and saying, I'm not sure how much higher you're going to be able to go because you have been running the 30 ATR here on the daily chart for quite some time. And so, yeah, that looked pretty rough to me. And then we just started to see some negative divergence. So price up, negative divergence right there. That's what we pointed out yesterday as well. And yesterday I was looking for NVIDIA to start coming down yesterday. We got just a little bit of a tease of that right there. And then you can see today we are now clearly underneath the 15-minute 50. So again, what is the start? What is the catalyst of this? Well, for me, it's that 15-minute time frame. So you can see NVIDIA is breaking down like that. And then if we look at the SMH, this was another thing that was a little bit concerning. Now, I also said yesterday that we may not necessarily go down. Like this may not be that bad. Like, yeah, today's a down day, but overall, the market may not go down a lot. It could just go sideways. I'll show you an example of what that might look like. But looking at the SMH, you're like, huh, this doesn't look like it wants to go up, does it? I mean, it is basically bear flagging into the underside of a downtrending hourly 50 with the Moxie indicator below 0. So that was another thing that had me kind of, I guess, eyebrow raised yesterday looking at that SPX moving up. At the end of the day, I'm like, that doesn't seem right. And you can see here too, we had the 15-minute 50 underneath the 15-minute 21 and all that. So that just wasn't looking like the market was ready to continue to move up. If we go over here, we can look at the NASDAQ. That was a little bit trickier too, because, on the surface, this was actually looking pretty decent, maybe 8 over the 21, price over the 50. And, so just like the SPX, it closed up like that. But it was kind of throughout the day yesterday that before we got that move up here, I was looking at this and I thought, that seems to me like price is trying to kind of erode the strength of the hourly 50. And we talked about this yesterday. It came down like this, kind of like this. And it's like, is it going to be able to move up like that? Or is this actually going to do something to start to come down to test some support? Now, let's zoom out a little bit and let's talk about, if the market doesn't necessarily go down, but it's not ready to continue going up, then what might it look like? And just one of the things, proxies that I've been using is back here, May of 2023, when we were dealing with the debt ceiling crisis. And what you can see is that the market came up here, ran right into its previous high, and then we really started to get into some chop, big range. And yes, there were definitely some down days, there, a couple down days there, another big down day right there. And then we took off when they finally fixed the debt ceiling crisis and said, well, we're going to kick the can down the road again. So it just, I don't know if it's going to happen like this. I'm just mentally preparing myself and you guys. I'm talking about it and just saying that if the market is not ready to go up right now, which I think is likely, and we have the elections coming up, and those might be a little bit challenging, I suppose would be a word to use. We don't know what's in store, and the market may not really be willing to go in any particular direction while all of that is happening. And so maybe this happens. If it's not the worst thing in the world, if the market doesn't like roll over and crash and die, then maybe something like this. Basically, we have the 8 staying over the 21. We have price staying over the daily 50. Let's see if that happens because we're in a fairly good situation. I mean, come on, we're making new all-time highs. We've broken out. We're making high highs like that. The market overall is good, but what if it needs a break? We've seen this over and over and over. It's totally fine. It's expected. We are still some distance away from the daily 50, so we could get some big volatility in through here and chop around as the 50 comes up to it. And we just need to be kind of okay with that. We've seen similar even just recently. Here's price testing the daily 50, and this was a pretty big move down below the daily 50, but everything came back. I I don't think we're going to get something like this. That was the yen carry trade and probably a couple other things. That was a big unwinding right in through there. But instead, I think we should be prepared for maybe price in the daily 50 to meet at some point. We'll kind of see whenever that happens to be. Yeah, and I think that's kind of the best. Just kind of looking back, I think that right here, May of 2023, with the debt ceiling crisis, I think that's probably the best analog as to what might happen with the market. Not going to say it is, just saying might. We'll have to look into it. Mitch, is a buy at the daily 21 EMA too risky? It's middle of the road because what I'll say is if the market wants to go lower, then when it comes to the daily 21, it typically will bounce, but that bounce will be shortly lived and then the market will roll over. Okay. And the only kind of clue that I kind of have to that sometimes is that if the market is actually really going to be going lower, a lot of times it will start to break the 21, and that's your clue that it's actually going to now really go through it the next time. But to show you an example of if buying it at the 21 is too risky, let's just say, there we go. Let's just say that this was, came down to the 21, you bought it because you're like, oh, big drop, 21, I'm going to buy it. Well, it bounced for 2 days. So you'd be correct. But then that's the unknown. This is why I talk about the elf shoe pattern, and we have to have confirmation, and we have to use the lower time frames to really see if this is going to keep going, because then you could see it came up here, but then came down, and again it bounced off the 21, and then it started to break. See, that's the situation of what happens is when you come into the 21, if it's going to hold, then you're going to keep going. It's great. Then you can buy the 21. But if the market wants to see lower, you will see an initial bounce off the 21, but then later it's going to fail the 21. So it's a little bit of a loaded question. And all I can say is if the market's going to go higher, buying at the 21 totally works and makes sense. But if the market's going to go lower, then buying at the 21 is not going to be a good deal because eventually it will break below it. So if you can figure out that the market wants to hold, then yeah, absolutely buy at the 21, buy at the 21 right there. And it could be good, maybe if, I don't know what your trade exactly, what you're thinking of, but if you're thinking just a short-term trade, yeah, maybe it could be good for 1 or 2 days. Just like this, bounce off the 21, good for a day or two, and then came back down. So yes, it is something I would look at, but make sure we use all of our other parameters to help tell us if it's going to be a good continuation or not. Because you can even see here, this was another one, bounce off the 21, continue, great, yep, that was a good trade, that was perfect. So it's really up to the market and if it's going to continue upward or not. All right, so let's see, we kind of ran through all of the major indices. Let's take a look at breadth. So $SPXA50R. And this is what I am slightly concerned about. And this is kind of why I'm starting to think, okay, we might be starting to see a little bit of change in trend, change of character, and maybe the market is starting to get cold feet going into the election a little bit. You could potentially see here, I don't know if that's the best trend line, maybe this is a little bit better of a trend line, wherever you want to take it from. But you can see here that generally speaking, we were making higher lows, except for now. And the other thing you can see is, I've talked about this all the time, but the market doesn't really like to have more than 80% of stocks over their 50-day SMA. Because you can see every time that 80% of stocks got over their 50-day SMA, we got a pullback. Now the market was able to hold it because they were cycling through, But you can see right here, it just couldn't quite get past. And so maybe if we do this enough times, we're going to run out of bullishness just because everybody's long and everything keeps cycling to the upside. And we're going to have to kind of cycle the other direction. And we might be in that process here to where we start to see this start to move lower, which means fewer and fewer stocks are going to stay over their 50-day SMA. Okay, so that means fewer and fewer stocks are going to be going up and more stocks are going to start pulling back. Another way to look at this, we can look at the put-call ratio. Now, I've talked about this one a lot, and basically over the last, several weeks, if not a few months, the put-call ratio has been really not helpful because you can just see, look how long this has mostly been hovering around the 0.7, and just look at the market keeps going up. You know, there were the occasional blip here and stuff like that, and that kind of helped mark some lows. So it has been really, really, not helpful. I think the only thing to be aware of is that we're just still here again. And if this is a top, then okay. And we're probably going to look for the put call ratio to come up a little bit. It just has not had its big swings, low to high to low to high. We haven't had that. It's been very just muted. And that's mostly because the market's just been on fire, really. So we'll see. We'll see if that starts to do something. I think that this breadth number has actually been doing a little bit more. That's a little bit better for us. And those in the Moxie room, I'll post when I get off here. I'll look at the 20-day SMA, which I have to look at on stockcharts.com, and I can post that one for you guys, and we can talk about that a little bit further. So yeah, that's our big picture, and we'll just have to see where the market wants to go. Because if we look at FNGU, generally speaking, these look fine, but they might be in consolidation. We can look at MAGS, MAGs. We need to be prepared that this might come down a little bit. There's a fairly good gap here between price and the daily 50. It's been holding the daily 21 pretty well, but I'm starting to think that this could wear out. If you look at the hourly Moxie indicator, you see how that is below zero and price is up here, and we have that gap between price and the daily 50. So I do think we're going to start getting some weakness. I've been waiting for it. I've been trying to figure out when this thing's going to show up. We had the election and election jitters and market wanting to take some chips off the table, all that kind of stuff. I'm just going to kind of been waiting. I feel like we're starting to get that. That might be kind of the reason of what we're seeing. And the other thing, I know a lot of people are talking about interest rates because the interest rates have spiked back up. And that could be another thing that is putting pressure on the market. Certainly, we've right there. So over the last couple weeks, interest rates up, market was able to largely shake it off for a while, but I think right now it seems like everything's kind of catching up to it. And then I was thinking, oh, okay, if interest rates are going up, how does it affect the home builders? Well, lo and behold, here's Nail, not so happy. It was able to kind of push up for a while, but here you can see here's your double top, and now we are, look at that. Now you can see we're breaking the daily 50. So it was holding, break. So these negative interest or these increasing interest rates, I think, are having an effect on some sectors like Nail. I know some people were talking about BLDR, and right there, double top, boom. And in fact, for those of you who want to see what I'm seeing, like I just spoke about, actually, look at this. This almost looks exactly like this. All right, take a screenshot or on your own screen, look at this stuff and compare BLDR to MAGS, MAGS. Okay, this is just what I pointed out. You see how BLDR, came up, started flagging along the 21 EMA like this, and then it broke down to the daily 50. Also notice that here price was trying to get over the hourly 50, but notice that the Moxie indicator is below zero. Now compare BLDR to MAGS, and I'm just seeing this for the first time because I'm just looking at this. Tell me those don't look identical. Identical. In fact, there's your squeeze. Identical. Maybe we need to short it. maybe that could be your hedge. You can short MAGS, be long FNGU or something like that. I don't know. Whatever you want to do. But basically, here's your move up. Here's your flag into the 21. And if it can't hold the 21, then the daily 50 is probably what's next. And you can see here, price trying to get over the 50, the Moxie indicator below zero. Looks almost identical. Yeah. So I wouldn't be surprised to see MAGS go down to the daily 50. All right. So I know that's probably not the most exciting thing to be hearing for you all today and everything, everybody out there on the social medias and everything. I see we got a pretty good number of people out there, but hey, that's just something we need to know about. And if the market is starting to tell us it's a little bit topped out for right now, both with the internals and both with probably sentiment with the election coming up. I mean, we could see higher, 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 lower, lower, lower with the Moxie indicator. So again, this is something I've been waiting for, looking for, and just trying to be like, when is it going to finally show up? And I think we're seeing it. So good luck to us around the election. We'll see where things want to go. And other than that, I think we should basically understand that the market is probably no longer in its uptrend. It's going to be consolidating. It's going to be getting a little bit choppy, and we just kind of need to batten down the hatches, be a little bit more nimble, and I think we just need to wait it out until probably after the election. That is my guess. It's my feeling about how this goes, and we'll just have to see how everything starts cycling down. Watch the put call ratio, see if that comes up, which is good. We want it to come up if we're gonna get a fresh batch. We want to see the 50-day SMA breadth come down, cycle back down, and we just want to see things kind of cycle their other directions in order to build the next opportunity. And I think what the election is 3 weeks. Let's see, 2 weeks. 2 weeks out. And there might be some chaos a little bit afterwards. So, let's see if over the next couple weeks we can get the internals, the markets, everything else to cycle the other direction, and then we can look for the next bull run. Because I do think that the market is going to continue moving up. It's just maybe not right now. Okay, guys. So thanks again for tuning in. Boy, see a lot of people out there on the interwebs probably wondering what's going on with the market today. So I think that's what's happening. And you guys do what you can, and we'll stay nimble